Joining me right now is Naseem Husain, ETF Strategist from Mackenzie Investments. Naseem, thank you very much for your time and for joining us.
Pleasure to speak with you.
Naseem, now you are ETF Strategist at Mackenzie Investments, but it's not just a simple role. You play multiple roles in that title. Probably the most important of which, among the most important functions, is aiding advisors, assisting advisors in getting up to speed with ETFs. What do you see as the biggest challenge that advisors are facing right now in the context of ETFs?
It's a great question, simply because a lot of advisors are used to trading mutual funds where they put an order in and they get filled and they move on. So really looking at the first two letters of ETFs, the exchange traded part, is where they need that sort of assistance, a little bit of hand-holding to understand why there's a NAV price, there's a close price, there's a bid and the ask. These are always moving around and they're very rarely the same. So this kind of complexity, what to do, as opposed to the previous relatively easy experience of just clicking buy and getting your mutual fund. So that complexity, then they hear stories about how do I work with a market maker, they're confused about liquidity for new products. So those kind of conversations, it's great for advisors to have a partner like Mackenzie where they can call in and have that conversation. Hey, I see you have a new product, but it's got no trading volume. Should I be concerned? And well, the answer is no, because that volume that you're looking for will come from the underlying securities. Securities that have been listed for years, have lots of secondary market trading. The ETF is just a vehicle to get access to that basket of securities, whether it be fixed income, whether it be equities.
And how do you see, some of one of the problems that's occurring for advisors is that, I don't know if it's actually a problem, but a challenge at least. One of the challenges that's facing advisors right now is that the prominence of ETFs, awareness of ETFs is growing among retail investors. And those same retail investors who have been traditionally in mutual funds are finding out more and more about ETFs. They're hearing about them. And then they're coming to their advisor and asking questions about ETFs. And assuming the advisor hasn't yet made a transition or a shift towards the ETF business, towards recommending ETFs within their clients' portfolios, what do you see as what do you think is the fundamental, the first thing that advisors need to do? There's probably a big place for education in there.
Absolutely. So if you think about a lot of advisors, especially successful advisors, have been building a book of business over years, and they've been selling products that they're comfortable with. And now there's new products, and they have new partners. They have, their wholesaling teams from the various partners that they've dealt with, and so they'll reach out and ask them about ETFs. And these wholesalers have also been selling mutual funds for 10, 15 years. So it's very comfortable for them to say, why don't you just buy the mutual fund? I'll just sell you a mutual fund. You like mutual funds. It's great. And that's why firms like mine have an ETF strategist team to be able to service those ETF questions, to help our wholesalers really get access to the really detailed information on ETFs when needed, to give that handhold, white glove experience, and to help coach our wholesalers to make sure that they feel comfortable to be able to have these conversations and access all these tools in the toolkit. Because really, we want them to have that wonderful relationship with the advisor, that they can have a conversation with that person that they trust, they can share their objectives, and that then person can help advise them on, well, maybe this is a great solution for an ETF, or maybe this is a great solution for a mutual fund. What's your fee budget? What's your risk budget? Let's work through this. And by the way, we also have tax planning and estate. We can help you with your full spectrum of challenges to service your clients. And I think that's why this is a challenge that we're going to address over time with education, but it's going to be ongoing. It's not like we're going to say 2021, education complete, mission accomplished. There's always going to be something new to talk about. There's always going to be a new structure or regulatory development.
It's very gradual. I think a lot of, maybe some advisors are feeling a fair bit of overwhelm in terms of having to learn about a whole new way of thinking and a new methodology, switching to fee-based. Do you see that as being a fundamental challenge for advisors?
I think it's natural to feel overwhelmed. I think that's a good step. Because if you're not overwhelmed, then you haven't been paying attention. You haven't seen the whole opportunity set, and you haven't been exposed. It's like discovering the internet for the first time. There's so many things I could learn how to online shop, learn how to do anything,
Yeah.
you're going to be like, well, now I have so much choice. How do I sift through it? Where do I get the good ideas? Where do I evaluate these ideas and how? And the interesting thing is now there's a lot of people available to give you that structure. There's a lot of partnerships. There's a lot of companies that are helping us screen or giving us ideas on how to evaluate these things. But I think first you're just hit with that fire hose, and it's natural to be, unprepared for just how much information you're getting into, and then try and look to those trusted partners you've had over the years to help you navigate that complexity.
Yeah, the transition from transactional-based business as well to a fee-based model, in a way, the ETF and the compression of costs is forcing, in a way, it's putting a lot of pressure on advisors to change the way they get compensated. It used to be under the old sort of tradition, it was with all, assuming all things were equal between mutual funds, you got compensated by placing money in products, and then, as an advisor, you had to justify, you had to explain your value through the commission model, through the transactional model. But in reality, the cost compression changes the value proposition, takes it away from product, and puts it strictly on advice. Mm-hmm. And that's, I think maybe that concept or that shift might be less challenging for some and more challenging for others. It depends on what you've gotten used to. And it may take years for an advisor to transition fully from a transactional model to a fee-based model because of it. But it really forces you as an advisor to determine, or to assert your value in other ways in the truest sense of advice. A long run, on balance, it's terrific. It's a terrific way, it's a terrific opportunity for advisors to truly define their value in a way that they were conflicted about in the past.
If you think about the traditional advisor who was a stock picker, they wanted to show their value, they went to their client and said, I bought you these great names, look at the great returns they've posted. That's their value.
Yeah.
And that model has changed dramatically thanks a lot to having ETFs and well-designed mutual funds where they can get great performance, great exposures, and they can focus on the other sides of their business where they can help their clients understand their needs. The financial planning aspect is so much more important now, making sure, simple things are crossed off. Are you paying down your credit card bills? Are you funding for your child's education? Are you managing your finances well for a transition in your family? Like, these are all value-added things that can really destroy someone's wealth if it's not looked at. And that's why I think advisors are much more going, there might be a time in my career where I'm really good at stock picking, but that might fail, or I might lose interest in really paying that much attention to the market, whereas I am good at picking managers to manage the different sleeves of the money.
Right.
And I can help you manage your money and be more successful at life. And I think that's a really great way for them to go, to become that advisor of choice for the end client.
Well, it's an opportunity for advisors to really unload a lot of the things that they thought defined their value for things that actually do. Advisors really have an opportunity to redefine themselves in a very productive way.
And when I think about my own portfolio, I spent the first 10 years of my career as a trader, so I fancied myself very good at reading the markets and timed going to cash or levering up and doing things. And posted some good returns and posted some awful returns as the years went through. But when I was managing my wife's account, it was a nice little benchmark. You see just stable returns, well-balanced portfolios chosen from diversified ETF selections, raising and lowering as the markets perform or don't perform. And I was always like, why am I working so hard to generate the same returns? And they're low-cost products. And I slowly learned that over time. And it's funny, as you get older and you accumulate more wealth, your mindset also changes to not wanting to lose that wealth, and how do you protect that? And that is the same conversation that advisors are having with their client all the time. They're successful clients that are helping their business have money to manage, and they're also having more difficult and more challenging, tax and estate planning to really go through. And that's where I see, this fee-based accounting and that value-added relationship going, and hopefully continuing as there's family succession, the next generation of children coming in. They can see the good advice they had over time. They can see maybe a family practice, like all kinds of things that move along with them and get that good advice.
Yeah, exactly. It allows advisors to be advisors, and it takes away all the transactional conflicts. Naseem, Pleasure talking to you.
Thank you so much.